Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 21st, 2024, and we're diving into Medpace's latest earnings report for the third quarter of 2024. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Medpace, a global clinical contract research organization, has just released its Q3 2024 earnings, and there's a lot to unpack. Let's get started.
Revenue and profitability overview. Let's start with the top line. Medpace reported a revenue of $533.3 million for the third quarter of 2024, which is an 8.3% increase compared to the same period last year. John, what does this tell us about the company's performance?
This revenue growth indicates strong operational performance and effective backlog conversion, which stood at 18.2%. Despite a challenging environment, Medpace has managed to increase its revenue, showcasing its resilience and ability to capitalize on market opportunities.
And what about profitability?
Medpace's net income for the quarter was $96.4 million, translating to 301 cents per diluted share. This is a significant improvement from last year's $70.6 million, or 2.2 per share, reflecting a robust net income margin of 18.1% compared to 14.3% in the previous year.
Operational efficiencies and future outlook. Medpace's EBITDA also saw a substantial increase. Can you elaborate on this, John?
Absolutely. The EBITDA for Q3 2024 was $118.8 million, marking a 31.7% increase from the previous year. This resulted in an EBITDA margin of 22.3%, up from 18.3%. The improvement is largely due to operational efficiencies and effective cost management.
Looking ahead, what is Medpace's guidance for the rest of the year?
Medpace has provided a strong revenue guidance for the full year 2024, projecting between $2.090 billion and $2.130 billion, which represents a growth of 10.8% to 12.9% over 2023. This optimistic outlook is supported by their strategic initiatives and market positioning.
Strategic initiatives and market position. John, how is Medpace positioning itself strategically in the market?
Medpace continues to secure significant new business awards, totaling $533.7 million this quarter, although this is a 12.7% decrease from last year. The book-to-bill ratio remains at 1.00x, indicating a balanced inflow of new contracts relative to revenue. Additionally, their backlog has increased by 8.8% to $2.927 billion, which bodes well for future revenue streams.
What about their operational costs?
SG&A expenses have risen to $49.2 million from $41.4 million last year, reflecting investments in growth and expansion. However, these costs are well managed within the context of their overall financial performance.
Risks and challenges. Every company faces challenges. What are some of the risks Medpace is dealing with?
One notable challenge is the 12.7% decline in net new business awards, which could indicate competitive pressures. Additionally, while they have a strong cash flow from operations at $149.1 million, they did not engage in share repurchases this quarter, which might concern some investors looking for capital returns.
How should investors interpret these risks?
Investors should keep an eye on how Medpace navigates these competitive pressures and manages its growth strategy. The company's strong cash position and operational efficiencies provide a buffer, but maintaining momentum in new business awards will be crucial.
Key takeaways. To wrap up, Medpace has delivered a solid performance in Q3 2024 with notable revenue and net income growth. Their strong cash position and optimistic guidance for the year ahead are promising. John, any final thoughts?
Medpace is well positioned for continued growth, but investors should monitor their ability to secure new business and manage competitive pressures. Overall, the company's strategic initiatives and financial health make it a compelling investment prospect.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Medpace's performance in the comments below.